Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's October 11th. This will be our chart lesson for today. And I thought I'd start off by showing you the daily chart again. And this is a good example of why you don't argue with the price action. As you can see, it looks like we've headed lower again. This trend line is still held. We've yet to close outside of it twice, 3 times. It looks like we were going to trade out of it and reverse, but that channel's still holding. And when we came in this morning, the lows were right in here somewhere, and we were trading up and testing this. It looked like we were about to break higher, and maybe that we might make another leg to the upside. But in the end, this price action held, this trend line held, and we closed headed lower again. Right, and this is basically the midline right here of this these bands. So this basically acts like the regular 21 bar EMA. So, and you can clearly see that that trend line's still in play, that midline's still in play, and looks like doesn't mean we can't bounce and go out of here tomorrow, but as of now, this price action, the price action told us it was probably going lower. It was hard to imagine that when you had such a nice reversal bar early on, just about to break higher there, but in the end, the price action wins out. So that's the reason we don't argue with it. It's rarely ever wrong. Usually tells you where prices are going short term, and it was telling us prices should go lower, and sure enough, before the end of the day, they're going lower. So anyway, I thought that was interesting to show this because I really thought we were going to push higher this morning, and it didn't happen. We still don't have that measured leg yet. And so it's a very distinct possibility that we're going to run all the way down here and make that measured leg, or maybe even a measured leg similar to that one. So you could get a couple of different targets here. Let's just see what this one gives us. Pretty close to the other one, but that might give you an additional target to the downside if we kept pushing lower. So plus you got the measured move on this channel right here. So this basically is a failed breakout. This yellow congestion, which is just a small range or whatever, and you can see we broke out and it failed, and we're back inside that now. So we may still chop around in there, or we may push lower, and there's a measured move for that down here as well if we break out the low side. We didn't quite make the measured move to the upside. We couldn't get through that yellowish gold or orangish color band right there. So it turned prices down basically to the tick. So anyway, that's just to look at the daily chart, and what it still looks bearish. Looks like we're still in a downtrend, and so I thought I would throw that up again. Let's switch over to the 2000 tick. Okay, here's our 2000 tick chart, and we started out in what looked like it's going to be a range this morning, but this trend channel here held, and it was really strong early on. But I originally had this a little higher with it up here, but I think this turns out to be more where your highs are, right across here. Actually, just a tad lower than that, maybe. Like right across there. And you can see that's pretty much where we're a measured move there, and we turned down. And now we've broken out the lower side. The market still has not closed yet. It's only about 320. You're probably not going to see any more movement much from here, though. So if you haven't heard me talk about it lately, I've gone back. I moved the cutoff, the new trade time. Don't take any trades after 2:30 rather than 3. I just think there's just not enough movement after 3, and I think if you get into a trade right there at 3 o'clock, you're going to be in trouble. So then you have everybody right around 3 that's still closing down their exiting trades, the day traders and so forth, and exiting their equity trades and stuff, and it really affects the market that time of day. So anyway, no new trades after 2:30. That's kind of where I'm putting it at now. We may move it back to 2, but right now I still think if you could enter a trade right up until about 2:30 and be fine. So not a lot of trades today. You just didn't get a good chance to enter this stuff up through here. And there's actually, I'll throw this out there. Most of you probably are not going to be, it's not going to be something you want to do, but there is a short-term trend channel. Let's just give this one a different color. Let's make it kind of a pinkish color there, so it's easy to see. When you get a strong trend like that, pretty much any pull back to it that gives you a good signal bar, you can almost enter. And you can see that any good signal bar that really came up off that trend channel was good to go. You finally failed here, but notice that it closed outside of it as well, so that would have been a clue not to go higher. We still pull back and you get a second entry long there, and then another higher low, but there's just too much, there's just too much congestion right there. We really need to change. I had it listed as support there early, but it turns out it's just congestion across there. So I don't think I would take any of those entries, even though they probably would have survived them. I don't think it's anything you want to take there. But if you recognize how strong this trend is and how you got all these little bars that just keep going higher, lots of stems and dojis, but it just keeps going higher, that's a strong trend. And generally, anything that comes back to a trend line on that gives you a good signal bar, you just about can enter that. The longer it goes and the further it goes, the more dangerous it gets. But generally, you'll see that it's pretty obvious when you can't take an entry anymore. Once it closes outside of that trend line, I wouldn't take anything else. But if you get a good signal bar, like right there's one, that one's iffy. There's one, there's one, there's one. I don't think you've got enough evidence yet that it's very strong until you get up into here, but just something to think about there. So, but let's back out here or zoom in here and talk about the trades. And your 7 o'clock comes just as you're coming here. We were in this little tight yellow channel, yellow range, I mean, and we broke out to the downside. We came back, and you try to go higher once, then twice. And basically what that is a first entry, second entry. It's a failed second entry short. Technically, it's not a second entry long because your new high is over here, so it's a first entry and second entry, and so technically that's a third entry, but it still looks like a second entry. It's a failed second entry short. It is a little congested, but it's right off that support, and the odds are we're probably going to come back into the range right there. So I like going long there. It's a little aggressive, but if you took it, just understand it's an aggressive trade. But if you like that trade, I wouldn't have a problem with it, as long as you realize that it's aggressive and it could fail. But anyway, we run back up and we start finding resistance here. We actually break out here. There's a second entry short, but it's an engulfing bar. So I'd probably wait on a lower high, and then you're just in this congestion, and you actually get a new low here with a first entry, second entry right off the key entry point. So there's a failed second entry short there. The key to this one is you need room to get out before you get back to these highs right here. You can see how many times we turn down there. You don't know that it'll get through there, but if you can get in with enough room to get out before there, then take that trade. It's a good signal bar. It's a failed second entry short. Technically, it's a second entry long. New high right there, first entry, second entry. It's off the EMA. You've got the trend channel line working up right there. That's basically what's happening is prices are stuck between a support and resistance area. So if you got room back to the resistance, take it. But I wouldn't go long right into that because it could hit it and turn back down again. In this case, it goes through. We already talked about, if you really understand what's going on there, how you might trade that. You need to be really careful with it, though. and we're working along sideways here. We do break out and get a first entry, second entry that bounces, it closes above the support. So I like going on. Again, it's a little aggressive, but the key is, do you have room to get out? If you do, you may take that trade, because you were looking for prices to come to make the measured move at this point. We'd already far surpassed there's your first leg up, and so there was your first measured move. We'd already far surpassed that. So you had to assume we were working on the next target. Again, I originally had this range a little bit bigger from up here, but once we found this resistance right in here, you'd probably want to adjust this and bring it in. And you may not have adjusted it until you saw it going into this resistance here. It's obvious there's something going on up there, and you get your break here too, so that tells you more. If you didn't adjust it by then, I would have adjusted it at that point. You get a little channel working down here. You get a break, a couple legs to a new low. You get a higher low here. It's not a great setup, but there's a little room back to the EMA, and you're probably going to at least come back to the EMA, and you're probably going to come back and test this at a minimum. But we still should likely maybe try to retest this high. It was such a strong trend, and so it does continue on up. And then all of a sudden, when it finds resistance up there again, the bottom falls out of it. And unfortunately, there's no setups to get in this really until way over here. You finally make a new high here. There's basically a little double top here, so you can count that as a new high. First entry, second entry, and when it fails, you could go short right there. I guarantee this is going to trap some traders. And if you recognize this looks like a range, you figure we're probably going to get back in the range anyway. So we're probably headed lower. And this is just a spike and channel down, and you can see the channel here. Then you get a first entry, second entry. This actually breaks higher. I don't know that I would wait and go short way down here. You just about want to trade this one on the engulfing bar, and you got to be careful with those. But I still like that trade. You figure we're at least coming to here and probably going to continue on lower. This channel's still in play. But you make another new low, first entry, and then that's a second entry short, because it makes that, even though it doesn't break higher, it still corrects by making equal lows right there. So when it breaks below that, that's a second entry short. And they are matching highs, so you could take that trade. I marked it green. It's a little aggressive. Then you come back and you get another first entry, and then it's almost a repeat pattern and another second entry. But this bar is so much more bearish even than that one looks. I probably would have marked this one red, other than the fact that it was not back to the trend line. It is right at the EMA, which is a minor key entry point. So in a real strong downtrend, a good setup, you might take it. But this is coming off the low side, so it looks a little suspect turning down already. But it's a second entry with such a good signal bar. If you took it, I can understand why. You don't want to be taking any longs yet. We do get a break here. We turn back down. Unfortunately, you don't get an entry there, and then we kind of go flat again. We're in this little trading range. We break out, and you get a second entry short with a nice signal bar. We're not necessarily looking for second entries now, but if you get one and it fits the other entry criteria, then you probably want to take that trade. It's a nice signal bar too, but bearish as it gets really. So that turns out to be a pretty good trade. You don't get a runner, unfortunately. Bounces out of there again. Makes a new high. Try to go higher once. Try to go higher twice. It fails. This is not a perfect reversal pattern, but it is a trout, and it does. I didn't draw that on up, but you can see we kind of get back in there, and it breaks out the low side and test it on that failure. So you may take that. Again, I marked it green. Just not a lot of setups today, especially not good ones. So you got the trend line, the EMA, and this acting as resistance, this previous support. And that takes us on into the 2:30 hour, and it just continues on down, where we're still pushing lower here into the close at 4 o'clock. So not a lot of trades today. really, I mean, it's really hard to sit here and watch a chart move straight up like that and not find many entries, and then move straight down like that and not get a lot of good entries either. I mean, it's pretty obvious that we've gone back to the if you and that's another reason it's probably not a bad idea to keep an eye on that daily chart, because if you didn't see the daily chart, this might throw you off here. But if you look at the daily chart, it's like, duh, the chart's telling us this is probably going to happen before the end of the day, and it sure enough, it does. The price action is never wrong. Very rarely will unless it's in a transition period, we should have, it's telling you we're going lower, and sure enough, it goes lower. It goes lower strongly, much stronger than it went higher. So it's just one of those days, kind of an odd day. If you're looking at the 2,000 tick chart, it looks like a reversal day again, and that may be exactly what it is, a reversal day. So I mean, we didn't have much going on at all Friday. That's about as ugly as it gets. I mean, there's trades in there Friday, but you got to be really careful with that. So yeah, not much else I can say about today. It's just kind of a strange day. Real strong up, and then suddenly it's real strong down. And you got to know how to find. You got to understand what a spike in channel is too. You can see it. Basically it spikes down. That's way too steep a trend. And even the spike and channel down, so it spikes down and goes in this channel, but even that's a little bit steep. So that's a strong sell-off. So if you get a good setup, like these green ones, you might take those. So the odds are probably on your side. So anyway, yeah, I'm not going to beat around the bush. I'm going to wrap it up today. Today is a Columbus Day, I believe, or something. It's not a federal holiday. I mean, it's a federal holiday, but it's not many other people recognize Columbus Day at this point, and the markets are still trading. But there's probably people that, I mean, some of the banks are closed, so that could have something to do with an odd day as well too. So, but anyway, I think I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.